Greetings to the business community. My name is Jaime Martinez, and I'm the Senior Project Manager of the UTSA Small Business Development Center in San Antonio. I want to again welcome everyone to the second day of the Texas Rural Challenge, and happy that I can participate again as the moderator for this roundtable. As I mentioned, welcome everybody. And this particular roundtable will be our lender roundtable, small business relief and recovery. We want to be able to give the opportunity to all the attendees here today to be able to hear from these three diverse types of lending institutions here in the state of Texas, and hear a little bit about how they, very much like the Small Business Development Center, had to adapt early on in the days of COVID, and also how they had to pivot as well. So you'll probably hear a lot of that word quite a bit as we go through this particular session, pivot. Again, we've brought together a diverse set of panelists, not only to speak to us and learn about them and their institutions, how they adapted, but also to learn about what is still available. What services do they have available when it comes to small business lending here in the state of Texas, and specifically to you. As you all who have been attending the conference over today and yesterday, past couple of days, please, we do have submit your questions in the chat box to the right. And we will have our chat captain come and introduce here in just a moment. Then we'll be moderating the chat box, and then as we go through the session there towards the very end, allow you all some time to be able to direct questions specifically to Cheryl, Chris, or Mr. Terry here that joined us. So without further ado, what I'd like to do now is introduce our esteemed panelists that we are very fortunate to have today, even though we realize they're extremely busy. We're low business season right now for the Paycheck Protection Program, and I'm sure many businesses are knocking on their doors right now, not at their homes, but on their phones and virtual doors, I guess you could call it, right? So again, don't hesitate to type in your questions in the chat. So ladies first, I will start out with Mrs. Mary Peters. She is our chat captain today. Mary is our Associate Director of Operations with the Southwest Texas Border SBDC Network. So she works along with me. That's the network that I'm in the Small Business Development Center at UTSA. So Mary will be chiming in with you as you all type in your questions in the chat or comments. So Mary, thank you for helping us out with that. We appreciate it. Again, Cheryl Pyle. Thank you, Cheryl, for attending with us today. She is a business development officer with the private nonprofit lender Capital CDC. So thank you. She was born and raised in Houston, Texas, which another awesome note. An avid sailor, moving to Canyon Lake in 2002. So that's good to know. Over 40 years of experience in the banking industry. Joined Capital CDC in October of 2015, specializing in the SBA's 504 program. Past president of CRU of San Antonio, active board member of the San Antonio RMA. So thank you again, Cheryl. Thank you, ma'am. Mr. Chris McCorkle. Chris is joining us as a senior vice president of TransPayco's Commercial Bank. Thank you, sir, in the commercial lending area. Chris, like Cheryl, is not new to banking, has a wealth of experience, over 18 years in commercial banking, national and international in commercial banking experience. He's covered a vast industries to include agricultural, municipal lending, manufacturing, medical, construction, obviously participating in small business, middle market lending, and real estate. He's completed transactions in these types of loans in 15 different states. So as you'll notice with all three of them, it's not just one specific city or county. It's all over and in the various areas that I'm sure that they'll talk about. Currently specializing in medical and government guaranteed lending. Thank you, Mr. Chris, for joining us. Last but not least, Terry Crispin. Terry, he's got 20 plus years in commercial and small business lending. He's got years, obviously, of experience to lending in the small business market. Loan operations, which is, again, his main focus is helping businesses find capital funding, working capital funding to continue their operations, which is, again, why we're all here today. And just like all three, Cheryl and Chris, Terry, and their organizations over the years have been great friends of the clients of the Small Business Development Center in all of our networks. I remember meeting Terry about 14 years ago when I first started with the SBDC, and he did not have a beard and a little gray, like Chris was mentioning earlier, in his beard, but and meeting his father as well. So again, thank you for all three of you to join us here today. What I'd like to go ahead and do also with all three of you is, we've introduced you. We all know that you'll have a vast amount of experience in small business lending. But if you all could just kind of talk a little bit about your organizations for the attendees that are not familiar with your institutions, and we'll talk about keeping it to 3 to 5 minutes. To talk about who you are and what you do. Cheryl, tell us about Capital CDC and who you are and what services you all offer.
Well, we service the small business purchase of real estate. When the government set up the 504 program, they required that a certified development center work with lenders and borrowers to process the loans and service the loans. So out of about 200 CDCs nationwide, we rank pretty consistently about 16 or 17 and been in business for 15 years or better. So we're doing something right, and we service Texas, New Mexico, and just recently Arkansas. So if you're not familiar with the 504 program, I put a PowerPoint presentation in my booth here on the website. So you can access it and easily flip through it and get educated.
Thank you very much, Cheryl, for that introduction. Chris, talk to us about your institution and who you all are and the services you all offer.
So Trans Pecos Bank is a almost 100-year-old community bank, started in West Texas and now headquartered in San Antonio. We have 4 lines of business. Our community banking out in West Texas, serving Alpine, Marathon, Pecos, and the surrounding area. We have our fintech lending based out of San Antonio, our commercial middle market, growing our relationships across the country, primarily in government guaranteed lending. And then BankMD, which is focused on doctors, veterinarians, anyone that has a medical degree. It's a digital lending platform focused on all 50 states.
Good deal. Thank you. Thank you for that, sir. And Terry, talk to us about United Midwest Savings Bank and who all here and what services do you all offer?
United Midwest Savings Bank is probably the strongest little bank nobody's ever heard of. We're a small community bank headquartered in Columbus, Ohio. We've got roughly 6 branches there in Central Ohio, but we operate as a national lender, focusing on lending to small businesses, primarily through the SBA 7A loan program. We do that with a division of the operation, if you will. All of our larger ticket loans, those borrowers that are looking for anywhere from $300,000 up to $5 million, are typically handled by our business development officers spread out all over the country. And those are processed and funded through our headquarters in Columbus. Then here in Panama City, we focus on the smaller end of the SBA lending world, where we're looking for borrowers that have capital needs between 20 and 150,000. Typically, those are the size transactions that have been more difficult for most banks to be able to accommodate throughout the years. And so we really focused on that smaller end of the small business segment, primarily for those businesses that just need working capital. Because our approach to the lending process, I guess, is a little bit different from a lot of traditional lenders. where we're not as concerned with collateral. It enables us to provide financing to a lot of service-based businesses that historically find themselves shut out of capital markets because they don't have the collateral inherent in the business. So, yeah, in a nutshell, that's kind of who we are. We've grown to now I think we're the fifth largest SBA lender in the country in terms of total number of loans made, and somewhere around 13th largest in the country in terms of total dollar volume.
That is a very little big bank that you have. So thank you for that explanation. And again, for all three of you, but I do want to also recognize all of you for also being sponsors and an exhibitor for the Texas Rule Challenge this year. Again, we are very, very appreciative. So let's get right into the topic of discussion. I always kind of like to give a little bit of a lead-in statement as we go through starting the questions. I mean, again, as I briefly mentioned, like the Small Business Development Center, not just here in the state of Texas, we have over 20 offices providing one-on-one, no-cost confidential business advising. We also had to adapt. I mean, we're used to floods and a little bit of fires, but floods and fires, but not a disease that in a pandemic like this, a very novel one at that. When we had to go into quarantine, we also had to help navigate the understanding what the PPP was. Everybody was calling it the PPE at the time, and I'm sure it can kind of slip up at you all the same. But also understanding the rules and regs that we were all in the same boat on, and a lot of bankers, lenders, at the credit unions, small, large, were referring clients left and right to us on understanding what qualifies for the Paycheck Protection Program, the EIDL, the Targeted Advance Grant, how to apply, what applications do I fill out, and even so we are right now, we're still having to adapt and grow, and I think we're in a rhythm, all of us, mainly the financial industry, financial institutions that are out there at all levels on what's going on now and where we're going in the future. So, all that being said, and let's again start out with ladies first. Cheryl, can you please describe how Capital CDC, how did you all respond and adapt to COVID early on in assisting, your clientele?
Well, in the onset, we were flooded with borrowers wanting to defer payments, but the CARES Act came out and made those payments for our borrowers. So really, it didn't affect us too much. We actually just kind of slowed down in business and waited for everything and let all the PPP and the EIDL insanity take root. And so we kind of weren't too affected.
No, that's very interesting to say. I mean, you kind of had to just wait for the information and wait for, the floodgates to open up and the insanity, as you put it. Understood. Okay. Chris, same to you. I mean, talk to us, about what your experience was in your banking world on, when this all came up, and how did, what was your experience and how did you adapt?
So we were very disrupted. We had really 4 responses for clients, and then, from a personal perspective, they took really good care of employees. Everyone has laptops. Everyone got to work from home. They rotated people through the office. They were very open on protective measures. But from a client perspective, we did have the payment deferral request, and we did have to deal with a lot of that and close businesses, and working with our clients and how we could deal with their loans and how they were handling things for their customers and employees. PPP was huge for us. We did close to 100 million in PPP loans, but our average loan was quite small. It was less than 100,000. So we brought in a whole bunch of clients. We took non-clients. That opened up a whole new revenue stream for us, and that was primarily through a remote team. And we did that through an online platform. We did provide information on EIDL and some of the other programs the SBA was putting out, CARES Act updates, so that our clients could remain informed as to what was available to them. And then finally, we were one of the top 10 Main Street lenders in the country. We took advantage of that program, and through that, we're able to help a number of companies to refinance some debt, carry some losses forward, and help them stay in business when other types of financing were not available due to economic conditions.
Yeah, and congratulations on that. As far as on the Main Street part of it, but that's good to know. I mean, how your organization was, taking care of the employees, and then you all were just adjusting operationally and providing the resources to your clientele that they were asking for. They didn't know where to get it, so you all had to suck it up and figure it out and do it. So that's great to hear. Thank you. And Terry, same to you.
A similar experience, and we had a similar experience that probably closely aligns with a lot of our borrowers. In that, in the banking world, we are really the little guy. So the first thing that happened was we made the decision quickly to protect all of our employees. And so imagine a small bank with a small IT staff and small IT infrastructure. First thing we did was quickly pivot to where we could send our people home. And immediately began working remotely for those functions in the bank that could be done remotely. And that allowed us to then focus on kind of the task at hand. And that really separated into two paths forward, I guess. There was all of the craziness that surrounded the PPP loan program. And then there were just the general run-of-the-mill borrowers that were looking for access to capital through their normal operations, if you can call anything during COVID pandemic normal operations. And so it was kind of pivot into those two directions. In the PPP world, as the other lenders will probably reiterate, it was a strange time for lenders. And most people on Main Street are always going to have the same reaction, and that's, sorry, we don't feel sorry for you banks. And we get it. But as a personality type, most bankers are generally rule followers. We're comfortable with the lending rules and paradigms that we've known for 20 plus years. And PPP was a complete divergence from what we've seen, in that it was a program that was stood up in a matter of days, if not hours, with rules constantly changing. And literally, we were staying up till midnight, 1 o'clock in the morning, as updates were coming out and posted to the Treasury's website at 11 at night, trying to see how this is going to affect each different subset of borrowers that we've got working through this process. And the ultimate goal was, hey, we've got to get this capital into the hands of our small business owners, so that in turn they can get this money out to their employees. To me, the whole purpose of the PPP loan program was to keep food on people's tables. And to that extent, I think it was pretty successful. So we ended up seeing about a 30-day disruption in terms of typical loan production, because we were all busy focused on processing PPP loans.
So Terry, what do you feel were the most immediate needs and requests of support for your clients there early on?
Primarily, it was a lot of the unknown. Obviously, as you get into the pandemic, and we're going back, February into March, people are starting to be impacted as more and more people are staying home to the greatest extent possible. Then we start getting into the shutdown scenarios, and you see a lot of business activity dry up, whether it's service-based businesses, and people are initially thinking, well, I can hold off on that for 30 days or 60 days. Yeah. Hair salons being a classic example. I have never had long hair in the time that we've known each other, Jamie, but I went a year without getting a haircut during COVID, and that was part of it. And so those types of Main Street businesses were affected, and it's two things. You see a drop in revenue, and then how long is this going to last? So I think that fueled a lot of the demand for the PPP capital, especially when it was made available. Because people didn't know how long they were going to have to cover their operations and cover their employees.
Yeah, I know. I like what you had to say. I mean, I think giving them access to the unknown, which is where it was. So many things and very few places to go to for the unknown. Cheryl, over to you. I mean, what were some of the most immediate needs that, I mean, again, you're a little different, you're Capital CDC. So what were some of the most immediate things that your type of clientele needed that during early on in COVID?
Well, just the assurance that the payments were going to be made and that their loans were not going to go into default, and that we were understanding their hardship. But again, the CARES Act made 6 months of payments of principal and interest. So it was just a matter of, the oversight that those were applied properly, reassuring the lenders that they were good on our end and filling those gaps.
Okay. Yeah. Reassurance. That's a huge thing during the time of relief, during this COVID pandemic to the small businesses. Mr. Chris, talk to us about, what were some of the most immediate needs that your specific clients had during that time?
So I think payments were a major concern. They wanted to know if we could defer, how much flexibility we had. They wanted to know what we would do so they could take care of their tenants, take care of their employees. They also wanted to know how do we do PPP? How do we manage our employees? How do we not lose them? They were very concerned about their people. I felt like that was very admirable, but they really did care. And that was their first question. What can I do to take care of my employees? How am I going to keep them with food on the table when I can't open my doors? Those were their big concerns. And then long term, they're starting to look ahead after 30, 60 days and say, all right, I don't have receivables anymore, or I can't collect them, or we can't generate revenue. Can you help me get my business back open? I'm going to run out of capital at some point. These are real questions that we were having to answer. And we looked at payment deferrals. We gave them advice. The employee thing was a big one. They wanted their employees to come back, and some were able to reopen and pick up employees. Some lost them because their employees went to places like H-E-B or Amazon or some sort of delivery service because everything was getting delivered to houses and they had to have a paycheck. So
Right.
Then they're asking, hey, what are we going to do? How do we solve this problem?
Yeah.
Those were the kind of conversations we were having. The actual effect was to, defer the payments, to reassure them that we would be there when they reopened, and to talk through the financial realities of where they were at that time.
Cheryl, did you have a comment?
I did. Along with the CARES Act making payments, they also set up a process to continue growth. And it kind of covers what Chris was saying, that they wanted to encourage the new loan growth. And so they offered 2% of the fees to be waived to encourage continued processing of new loans, which allowed for some of these companies to fill those gaps. And along with the 2% of fees waived, they were paying at first 6 months worth of payments in regards to the new loans, and now it's down to about 3 months. So the CARES Act really tried to pick up the gap between the PPP and the idle loans with continuing new loan growth.
Okay. No, thank you for that, Cheryl, and that's actually very, very relevant. And Chris, you mentioned about a few of your clients calling in, well, probably more than just a few, but on the receivables. I don't have receivables right now. I can't collect on anybody. There's nobody to collect on, possibly, or losing a large percentage of them. So along those lines, look, we've talked about there's in what we've promoted and what we've discussed in providing our services in the SBDC and specific COVID services funded by the CARES Act. We talk about relief, recovery, rebooting, and then becoming resilient. We've kind of gotten through a lot of the relief. Not much disaster money available except the idle, and we're in recovery mode and rebooting mode. So, Chris, along with recovery and rebooting, I mean, are those some of the same questions that you're getting asked of you now, fast forwarding, from then, recovery and reboot? Are you getting those same questions about, I don't have receivables, what are you getting right now, questions of you from your clients?
Cash flow primarily. Sometimes it's reduced revenues, and the reasons are not exactly straightforward. Sometimes it's reduced revenue because they're a service business and they had to have certain restrictions in place as far as occupancy or times they could be open or what services they could provide. Sometimes it's lack of employees. Our contractors have all the business they can handle, but they don't have the employees to do the work. And the supply chain disruption. Hey, I've got all the business in the world, but I can't get the supplies to either manufacture it or to build this, or I've got to order it 6 months out. I can't build a house today and order the stove and the oven and the refrigerator in 6 weeks. I've got to order it when I start, and a lot of times they want payments up front. So instead of paying an invoice, we're funding down payments. Things we don't always do or haven't always done in the past, but we're accommodating for our clients. Their concern today is supply, materials, and labor. And then for some, it's the continued restrictions in demand. How do they build their revenue back up? And those are the conversations we're having. When does the cash flow start matching up with my cash outflow?
Okay.
And Jaime, I'm going to jump in here because we've got a very related question in the chat box. Jason Shaw, who I've come to know through this conference, other sessions, represents the Texas Deaf Chamber of Commerce, has a great question about businesses that are having challenges collecting payments for invoices for services that they've rendered. And his question is, do any of the lenders or entities do invoice factoring? Or perhaps do you have any other creative solution to help your clients, small business borrowers, experiencing that problem?
So we do borrowing-based line of credit lending. We do have partners that we will bring in that do invoice factoring. The one thing I would say is that most of your factors out there are going to look at the age of those invoices. And they're going to say, if it's too old, we're not going to lend on it. So that is a potential issue. But we do working capital finance, and we have partners that'll do the higher advance rates and do the true factoring that we bring in as the situation is appropriate, maybe when there's concentration issues or leverage issues to help a client out.
Great, thank you. Chris, Terry, you're kind of shaking your head. Do y'all have any other creative alternatives?
We do not. We're pretty much strictly a 7(a) lender. In previous stops at different banks, there have been some that I know we're using the cap line program. I don't know, Chris, if that's something that actually even still exists or if y'all participate in. But it's not something that we provide.
It's still out there. We've done a limited amount of it. It's not our focus.
Gotcha.
All right. Well, a tough question and some. Cheryl, you got something to add?
Yeah, I was going to say that a community advantage working capital loan a one-time injection might give them the funds to manage the receivables. So it's something to consider.
All right. 3 great responses to chew on. Back to you, Jaime.
Thank you, ma'am. Terry, and kind of what I was speaking to Chris about, and us discussing. I mean, what are at your financial institution? I mean, what are now moving into the recovery and rebooting mode of your small business clientele? What are they asking of you? What are they asking of your financial institution?
In a lot of ways, it's kind of turned back into the same things that it's always been. I think probably because of the pandemic, we're seeing a surge in demand for startup loans, and we've always had a high number of startups that we process anyway. And I think some of that has to do with just the mentality of everybody going through the pandemic in and of itself. People, one, start working from home a lot more than they ever have before. Two, they start questioning, okay, do I still want to keep working for this huge company, making money for somebody else for the rest of my life? Or is this the time to strike it out on my own? And so we're seeing an increased demand for loans to start up businesses. And it's just that. It's people that have had pretty good careers so far. They've built up some nest eggs in a lot of cases. But now they're interested in working for themselves and building something for themselves and for their family's future, as opposed to just a paycheck. So that seems to be the biggest thing driving our overall demand right now. I think it's just a shift in mentality out there throughout the country.
And that's good to hear, that you all are getting, requests for startups. It's, but, small entrepreneurs are more risk averse, and going through it. So no, that's great to hear. Cheryl,
well, I also think you can look back at the last financial crisis. Coming out of the pandemic, we saw that typically those loans that were made after 2009, 2010, they had better performance. The challenge was for those borrowers that were already in business when the major event happened. In a lot of cases, the ones that we're looking at today kind of know the rules of the road going into it, that COVID is a factor out there in the market. How big it will be going forward still depends on a lot of unknown variables, but they've got the ability to plan for it. Where, people that had been in business for 10, 15 years, this was a pretty big shock to their system in a lot of ways.
Correct. Good. Yeah, that's a good comment on that one. And Cheryl, what are your lenders asking of you? What are they asking CDC now, and how do y'all plan to move forward with that?
Well, they're asking for expedited loans, and we're being inundated, which is encouraging that there's such demand, but grace on financials, because obviously businesses that had a long track record of being having the income to debt service took a hit, and so now their financials don't support, and so here again the SBDC comes in to help with projections and a plan on how to come out of it. So we're having to put more effort into providing the debt service coverage on new loan requests or refinancing.
Okay. So you ended your statement with some of the services, and so there probably are some lenders that are on this particular session right now. What other products? So talk to us about the different products that you all have at the Capital CDC and how you all are helping out the lending community.
Well, again, with the 504, it involves real estate that's being purchased or refinanced. And what we're seeing and what we're anticipating about to happen is an explosion in refinance. For a long time, you could not use the 504 to refinance a property. There are certain restrictions that, when they did set it in place, came along with it. But with the CARES Act, they implemented a new policy that's just much more open and friendly. So we anticipate that policy being released any day. With the new refinance, you can re-amortize a business for 25 years, which greatly reduces their monthly payment. There's opportunity to take equity out in cash and reinvest and expand. So, and with the new policy, we're going to be allowed to pay off other SBA loans, which we were not able to do with the previous refinance. So we anticipate that to be a huge explosion here when it releases. I will say this too, Capital CDC is a nonprofit, but we do take a portion of those funds, excess funds, and put it back in the form of a community advantage loan that we actually fund. Most CDCs don't do that. We're not a bank, but It's a great companion to the 504, which doesn't allow for working capital or marketing such to access cash to accompany the 504 finance.
Okay, thank you. Yeah, I wanted to kind of discuss that to really give you an opportunity of how, what specifically you all do for the attendees that are just not familiar with Capital Cities to be able to give you that. So thank you for all that.
I appreciate it.
Yeah, no, of course. Mr. Terry, so yes, you've talked about, some of the products and services that you all do, but, talk to us about what products and services that you all are offering now and, what's being requested of you.
Our bread and butter is the $20,000 to $150,000 working capital loan that we provide to small businesses nationwide. We do a ton of loans there in Texas. And really, it is set up to be just that. We're good at making a loan for a business to have cash on hand to get started and fund their operations. We're not good at that business that needs to go in, take down a lease, and do a build out. We're not good at helping a restaurant get started because of the licensing process required in that. Typically, to start that restaurant, they want to or need to go out and buy their equipment. Unfortunately, that equipment needs to be purchased and installed before they can get the inspection done so that they can get. So those types of transactions end up being kind of a catch-22 for us because we're going to require that business license that they're going to need to operate before we'll fund our working capital. We're a great fit for that Molly-Maid type business. My favorite example is the residential cleaning business. Banks forever hated that deal, right? Because there's no collateral inherent in it. You've got one or two people and they're going to go out and clean houses. So from an asset standpoint, they have what? Vacuum cleaners, a couple of feather dusters, and some 409. That's not the typical strong bank deal. I generally like that deal because if it's structured with reasonable repayment terms and you've got people that can go out and market themselves, they can generate revenue. And all of our loans are 7A loans, so they're 10 years, fully amortized, with no balloon payment, no call provision, and our interest rates at prime plus 2 3/4. By structuring it with a reasonable repayment term, we're looking to see what's the odds that they can be in business 10 years from now to pay us back. And what we find is a high degree of success with those businesses, even during the pandemic. People didn't magically start cleaning their own houses, or if you're talking about a plumbing company, that in a lot of ways is the same thing. It's a service-based business. Well, as more people went home during the day and were working from home, you had to call the plumber more often than you would have in other years. So that's really where we're a good fit, is in providing working capital for ongoing operations and those soft startup costs that you're going to spend in the first 2 or 3 months of business, whether it's for advertising or in some cases covering the cost of your employees until that cash flow stream starts being realized within the business. Until those sales turn into actual cash flow, we're a good source of funding for that type of business.
Yeah. No,
Hey, I have some people I can refer to you now.
There you go. Perfect. No, thank you for that, Cheryl. This is great. We also created networking here and they're interchanging clients. Terry, thank you. And yes, they also use Windex, and so maybe that can be
absolutely
part of the startup cost. Thank you for talking about your very specific. You're part of your target market, and that you all go after again for the benefit of the audience. Chris, talk to us about all the other, products and services that you all are offering. Services.
So, as a community bank in our West Texas markets, we basically are looking for every business in the community. We do everything from ag lending to development to the mom and pop plumber to the rental property. We service our community. We're very involved with the hospital, with the school districts, just to give back to the community and to make sure we're meeting the needs of our small business clients. From the statewide and national perspective, we're doing a lot of government guaranteed lending. Last year, we did the largest Bureau of Indian Affairs guarantee loan that had been done in history at $51 million for the Navajo Nation. We're ramping up our SBA lending in our SBA department, particularly in the medical area, but also in manufacturing and a lot of companies that are turning around coming out of COVID. They're having to restructure their debt. The working capital question was an interesting one because I got to thinking about that. We've done some 7A loans to smooth out the loss of revenue, basically. So we're heavily focused on government guaranteed lending, whether it's SBA, which is the majority of it, USDA, because we do serve a lot of rural markets, and Bureau of Indian Affairs on the national level is something that we've gotten more involved in. It's just these programs fit well with our bank. They fit well with our risk appetite. And, over the years, we've found that they fit well for our client base. And that's the client base we're trying to grow. Truly, we're a community bank. We're not a large corporate lender. We serve the small Texas markets.
Thank you for that, Chris. Thank you for talking about the differences between you all and comparing all three of you. I thought this was a really great discussion. Captain Peters, do we have any questions out there?
We got a great follow-up question, another one from Jason, and it really kind of has to do with lessons learned and how those lessons learned as a result of the pandemic have helped you prepare for the future. Cheryl, I think you did a great job of talking about how within the 504 program there were some policy changes that I think would certainly help small businesses going toward the future if, heaven forbid, we go through another type of pandemic or another sort of circumstance that would be an upheaval to our economy in the near future. But I'd like to hear more about that from Jason's question, just to say, what do you think you as an institution would have in place to address a future pandemic other than looking to government programs like the CARES Act and PPP and EIDL down the road? And then I want to do a shameless plug for the SBDC when y'all finish.
Absolutely.
So Cheryl, do you have anything to add to close out that comment?
Well, I just want to say that I think as a result of the pandemic, we're all, our mindset is broader in the sense of preparing for such. I think it's early on to be able to sit here and say, this change, that change. But if anything, I think just the awareness of our vulnerability. But again, I think it's a great opportunity while interest rates are still low to consider refinancing current real estate and just cash positioning a business better so that they can withstand the storm.
Yeah, that's great insight. Chris, do you have anything to add?
I think there were really two things that stand out to me that came out of this. One is that every few years it has to be reinforced that fundamentals matter. Borrowers that were minding the fundamentals of their business, the cash flow, their employees, client service, quality product, they came out better. And I think it reinforces the fact that the fundamentals of running a business and maintaining your financial status matter. And banks want to get competitive from time to time, and maybe they start to ignore those fundamentals. If you do that, you pay a price in situations like this. The second, I don't want to speak for everybody, but I'm just going to generalize for the banking industry. Banking organizations tend to be inflexible. We don't pivot well. We don't change directions quickly. And after having been through Katrina and about a dozen other hurricanes, having been through now my third recession and my first and hopefully only pandemic, what we have learned is that we've got to be more flexible as an organization. We have to work with our employee structure and where they're based and how they're supplied and provisioned. We have to work with our clients and their needs and changing in ways that we did not anticipate. And, you know, we have to be adapters of technology and opportunities. After Katrina, there was a huge Gulf Opportunity Program. We had to pivot and take care of that at that time. Now we have the CARES Act, PPP, Main Street. I had never heard of an EIDL loan, but it had been around for a long time. We had to pivot, become experts in that, and provide those services to our clients. It's not something I think banks are great at. Some banks excelled at it, but it's something that going forward, we have to be more flexible.
Okay, and I think we're actually out of time, but we can beg for forgiveness and go a few minutes over. Terry, if you have any quick comments you'd like to add?
I'll reiterate what Chris said. We were probably better suited for pivoting in a pandemic because we are so small. But if you look at what the industry did during PPP, we funded 30 years worth of transactions in about 30 days in terms of how quickly we were able to pivot. And this was a scenario where the country needed banks to be flexible and pivot into something that, hey, we knew nothing about. Nobody had ever made a PPP loan before. It didn't exist until it did. So I think as an industry, what we learned is that, like Chris said, by being flexible in the moment, when we need to be, we are going to be able to adapt and provide that level of service that all of our customers need. And it's not just customers in that truest sense. It's everything that our communities are going to need. And I think banks do play a critical part of serving that role all over the country.
Thank you. Before I make my shameless SBDC plug, there's a question in the chat box from Brian McKinney. Brian, I will ask you to enter your contact in the chat box so that perhaps after the session, Cheryl and or Chris and or Terry, you can connect and brainstorm on that question. Finally, my shameless plug is from an SBDC perspective. One of our lessons learned and what we were able to do was to make that entry into the virtual world, being able to provide our advising services and our training in a record amount of time to go virtual. And that is a lesson learned, is something I know we'll continue to do, at least in a hybrid model, so that we can better accommodate the small businesses that we serve. Our clients learned a lot about the importance of emergency planning. Certainly they've been through those hurricanes and tornadoes and floods and fires and everything else that are top of mind, but pandemics now included that. But I think from our clients' perspective, the greatest lesson learned is that those who had their books in order, those who had clear records that were up to date, were able to jump on these programs that were being offered, many of which were only available for a limited amount of time, like the Restaurant Revitalization Fund. If they had their ducks in a row, they were able to secure those funds quickly. So back to you, Jaime.
Thank you, ma'am, for that. So I do want to give just one last opportunity. We are only just maybe a couple of minutes over, but no big deal. Just to be able to provide your contact information, and so that the audience can write it down and follow up with you all accordingly. Again, thank you for being our sponsors. We're very, very appreciative in this particular conference for the Texas Rural Challenge. And so, Cheryl, how do individuals or how do lenders get a hold of you?
Well, you can always look up Capital CDC's website and find me there, but my email is my name, Cheryl Pyle, @capitalcdc.com. My phone number is 830-708-2445. And for those lenders out there, anytime you are entertaining the idea of using the 504, if you reach out to me and let me help you structure it with a worksheet, it'll make your credit underwriting much easier.
Thank you, ma'am, for that. Mr. Chris, how do our clients get a hold of you, or how do the attendees get a hold of you, sir?
All right. Well, I put my contact information in the chat box. You can check out our offerings on transpecosbanks.com or on bankmd.com. And because we service the whole country, we're on cell phones all the time. So 210-253-0550 is how you can reach me.
Thank you, sir. And last but not least, Mr. Terry, how do people get a hold of you?
The best way to get in touch with me is probably through our website. The easiest way to get there is sbdc.loan. And that has the information about all of our loan programs, as well as our contact information. I admittedly can be difficult to get in touch with directly sometimes, but really anybody here in our office should be able to answer your questions or get back to you as quickly as possible. That's sbdc.loan.
Thank you very much.
That's because you love the SBDC, right?
We do and always have.
Yes, yes. And all three of you have been great friends of the SBDC and its clientele for many years. And so this is not the first time. But again, I want to thank you, Mary, for being our chat captain today. I want to thank, again, all the sponsors, our panelists today. Great discussion, great information for the attendees. Again, thank you for the attendees for participating today. I realize you all are from around the state of Texas, and so to find your closest small business development center for one-on-one confidential business advice, you can reach out to us at sbdctexas.org and look for the locator to find your closest SBDC. Typically, we are based out of universities and community colleges around the state, with over 20 offices, with boots on the ground covering the 200 plus counties in the state of Texas. So you all have a great afternoon. Thank you for your patience. Thank you for your time. Have a great rest of your week. Take care now. Bye-bye.
Mary, Jaime, thank you.